I actually like the fact that this bull market isn't on anybody's radar, because I just assume Wall Street buy into the market later at much higher prices. They don't need to get in now. I want my clients to get in now. And the less competition, the better. I just want to get as much, gold mining stocks and silver mining stocks as I can. And the last thing I want is, Merrill Lynch and Goldman Sachs telling all their clients to buy, right? Because that's going to make it more expensive for my clients. So the longer they ignore this bull market, the better, as far as I'm concerned. Like, I'm in no hurry. I waited plenty of time for this, and I'm in no hurry to speed it up right now. But I do look at that as a positive sign that nobody's invested. The public, has no idea. You have one group of people that are still fixated on Bitcoin, and they're buying Bitcoin instead of gold. Although Bukele, I just read that he just put $50 million into gold. So maybe he's figuring out that Bitcoin is the wrong way to go. But, it's interesting that Bitcoin is barely up today, and Bitcoin is more than 15% below its peak priced in gold from 2021. So 4 years, Bitcoin's been losing value relative to gold, despite all the marketing hype surrounding Bitcoin. All the ETFs that were established, the NFTs, the Super Bowl ads, the celebrity endorsements, Donald Trump and the strategic Bitcoin reserve and the Bitcoin czar and making Bitcoin the capital of the world, right? All that pump, and they can't even get Bitcoin to go up. So what does that tell you? But what is going up is the one thing that's not getting any hype, and that's gold. And now silver, going up as well, but not into record territory. So these gold stocks, I think, are still extremely cheap. They could double again from here, and I don't think they'd be expensive, especially considering that if the gold stocks double from here, gold's going to be a lot higher. So it's like they still wouldn't have caught up to where they should be. So we got a long way to go in the mining stocks. In fact, in April of this year, I kind of aggravated some of the guys at Schiff Gold because I put out this report that said the best way to buy gold, and it was to buy the gold mining stocks. And I was telling my clients for the first time not to buy gold. And gold was around 3,200, 3,300. And I said, look, I'm a gold bull. I love gold, but these gold stocks are so cheap that it doesn't make any sense to buy gold above ground. Just buy it while it's still in the ground because it's so cheap. And while gold went sideways for all those months, the gold stocks were soaring. And they're not as cheap as they were, obviously, but they're still very cheap. And I still think people should be buying gold stocks and gold now, and physical silver.
What do you make of this significant and rapid drop in the USD versus gold? And do you think governments will eventually be forced to reintroduce gold to the monetary system in one form or another?
Well, I think that is going to happen. I think it's pretty clear. If you look at the main buyers of gold the past couple of years, it's been foreign central banks. Why are they doing that? I think they're preparing to replace their dollars with gold. I think gold is going to become the primary reserve asset for central bank. And that's going to be a game changer for the United States because the world is not going to need our dollars anymore. Well, if they don't need our dollars, then how are we going to buy all the stuff that we need? Because we don't produce it. And how are we going to finance our debt? Because we've been relying on foreigners to finance that debt because they have the savings that we lack. So it's a big problem for the U.S. But I think from a monetary perspective, you're going to see, I think, people utilizing gold using the technology that exists today, whether it's on-chain with, tokenized versions of gold, or whether it's just through proprietary closed systems where, the custodian has the gold and just uses technology to allocate ownership digitally so that people can transact business, receive and make payments, send money and receive money using gold, right? Just like using PayPal or Venmo or any other, Zelle or any of these things, you can just use gold. You don't have to transfer your gold. If I wanted to buy something from you and you wanted me to pay you, a gram of gold for it, right? Whatever that is, 30, 40 bucks, whatever, right? I don't have to send you a little bit of gold in an envelope and mail it to you. If the gold is held in a custodian and I have it tokenized in my wallet, I can just email or text you the gram. And now the ownership of the gold goes from me to you. So now you own the gold, not me anymore. You've got it. It's in a vault. Now, if you want the gold, you can have them ship it to you. But why do that? Just hold on to the ownership receipt, because now if you want to buy something, you can pay with gold, because the guy that wants to sell you that, he wants gold too. Why would people prefer gold to dollars? Because gold holds its value. Why would I want dollars when I can have gold? It's like, why use the post office when I can send something by FedEx, right? The free market has provided me with a better alternative than the government, right? Why do people use Uber and Lyft? Because taxis are too expensive. Why are taxis expensive? Because the government provides the licenses and regulates them, and so they're expensive. The free market alternative is, well, I'll just call an Uber, right? So the equivalent of an Uber in the monetary system is gold, right? Gold is the free market's money. Fiat is government money, and it's lousy because it loses its value. The longer you hold it, the less it's worth. The opposite is true of gold. The longer you hold your gold, the more it's worth. So given a choice, which would you hold?
One of the things I actually like about this bull market in gold and silver is that nobody's paying attention. Wall Street doesn't see it, the mainstream media doesn't cover it, and the average investor is still busy chasing tech stocks or meme coins. And that's fine by me, because the less competition I've got, the better. I want my clients to get in now while the gold mining stocks are still cheap, while silver is still trading at laughable levels relative to history, and while nobody at Merrill Lynch or Goldman Sachs is telling their clients to pile in. Because once that happens, it's going to be a lot more expensive. So the longer they ignore it, the happier I am. I'm in no rush to speed things up. I've been waiting for this for decades. I can wait a little longer, but you can see the pieces falling into place. And the irony here is that the same people who ignored the housing bubble are ignoring this. Remember in 2005, 2006, when I was warning that the real estate market was a ticking time bomb? Nobody wanted to hear it. CNBC laughed. They literally put me on TV so I could be the punchline. Then 2008 happened, and all of a sudden the crazy guy with the beard was right. Well, here we are again. Now people will say, "Oh, Peter, you've been bullish on gold forever." Sure, I have. But just because I've been early doesn't mean I'm wrong. If you bought gold in 2000 at $250 an ounce, you're not complaining now that it's over $3,000. If you bought silver under $5, you're not crying now that it's above $40. The people crying are the ones who listen to Wall Street tell them to stay in stocks and bonds while inflation destroyed their purchasing power. And by the way, speaking of crying, have you seen Bitcoin lately? The hype machine is still pumping. ETFs launched, Super Bowl ads ran, celebrities endorsed it, politicians embraced it. We even had Donald Trump talking about a strategic Bitcoin reserve and declaring Miami the Bitcoin capital of the world. All that noise, all that marketing, and Bitcoin is still down over 15% priced in gold since 2021. 4 years of underperformance against a lump of metal that pays no yield, has no celebrity commercials, and doesn't have a flashy ticker symbol. What does that tell you? I'll tell you what it tells me. Gold is winning the real battle. Bitcoin is a speculative asset. It trades like a tech stock. It booms when liquidity is easy, when everyone's chasing risk. But gold is money, always has been. And quietly, without the hype, it's been outperforming Bitcoin. You won't hear that on CNBC because they need the ad dollars from crypto exchanges. But the charts don't lie. Now, one of the big reasons I'm pounding the table right now is not just the metals themselves, but the mining stocks. These things are still ridiculously cheap. They've doubled off the lows, but they're still cheap. I put out a report earlier this year, aggravated some of the guys at Schiff Gold, where I told clients, don't buy gold, buy the gold miners. And people were shocked. Peter, aren't you the gold guy? Yes, I am, but I'm also a value guy. And when gold was trading around $3,200, $3,300, the miners were trading like gold was $1,500. That made no sense. So I said, don't buy the metal above ground, buy it in the ground. It's half price. And sure enough, while gold went sideways for months, the miners soared. Now they're not as cheap as they were, but they're still undervalued. Even if they double again from here, they'll still be cheap relative to gold's price. So yes, own the physical metal, especially silver, because it's going to move more dramatically. But don't ignore the miners. The upside there is massive. Let's talk about the US dollar, because what we're seeing is not just gold going up, it's currencies going down. That's the part that nobody in the mainstream wants to admit. This isn't a normal bull market. This is a monetary reset happening in real time. Look at the numbers.